The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we closed out the week of trade on Thursday, headed into a 3-day holiday weekend with no markets on Good Friday, I would say maybe a little bit of a disappointing close in quartered soybeans, just finishing mixed around unchanged across the grains and oil seeds. Another strong day in cattle. Outside markets, kind of a mixed bag there as well. Overall, we've been talking about this much quieter week in the trade, I think, across the board. Let's get some perspective on things. Joining us for market analysis, Brian Doherty, Senior Market Advisor with Total Farm Marketing. Brian, good to have you with us. A happy Easter to you and yours as we head into a holiday weekend. And your thoughts on the grains, as I kind of mentioned in the open, I was a little disappointed with how quarter beans closed the session Thursday, but a lot less volatility, I would say, has been seen here this week, Brian.
It was a pretty quiet session, different week, right? And so a lot of the tariff stuff is kind of people either went to the sideline or they're factoring it in or they're comfortable with the pause and maybe, some rumors today that or President Trump talking about negotiations with China. It's dynamic. It's always moving. May corn down 8 cents on the week, so kind of a little bit of a slip. But remember, last week was a heck of a week. There was a 30-cent change up, so not a surprise that we saw increased farmer selling, which we did. I think you can expect that, and some profit taking into the week. We saw earlier. Today's Thursday. I'm going to say Tuesday, Wednesday. We saw some reversal of bull spreads, where July and May corn have really been taking the lead over the December, and now that has changed a little bit this week. I think that's just exiting. Fun position, still net long corn, but not anywhere where they were at one point, in particular in February when prices were peaking. Quiet session overall. Your forecast has a real mixed bag to it. If you look at the 6 to 10 day, the most recent, the entire Midwest is above normal in temperature and above normal precipitation. So how do you read that on April 17th or 16th? You read it as well. Some who need rain, it's going to be warmer. It's going to make the soil conditions ideal. For others, it's like maybe another rain delay. So the market seemed to take the slant. Maybe if nothing else, it's a little bit better. And then lastly, it really I think productive export sales numbers again in corn, solid in soybeans, wheat, big disappointment, unfortunately.
Well, I wonder a couple things I want to unpack with you here. You kind of alluded to this, but just some of the action, some of the intermarket spread action we saw this week in corn and soybeans. I feel like seasonally, this is kind of the time of the year where we start to really shift our focus, away from remaining old crop and look over to the new crop. At least that's how I tend to view it. I mean, would you agree with that? Is that part of what we saw with some of the spread action type of activity in corn and beans this week, Brian?
Yeah, I think you would, and I think maybe some of the idea of some planting delays or less. I like to use this phrase: less than ideal start to the spring or
Okay.
planting season for many. Maybe provided some underlying support for December corn. But to your point, the market I think is looking ahead and it's making some generally broad assumptions at the moment. There's still premium old crop to new crop, so that inverted market, and it is a while before anything out of Brazil is available to the world market on the corn front. Uh, but the mindset starts to change. It's planting progress. It's the next forecast. It's what does the news look like that affects the new crop contract? And I think to your point, you get to about this mid-April, late April, all attention focuses on on the new crop for condition wise and planting progress. And then harvest potential in wheat. Everything's new crop. But the old contracts still have very strong viability because if there's any kind of tight inventory and supply concerns with the crop production, you might see that magnified in the old crop. But to your point, the market's going to start to focus on how things are going. How is planting progressing?
Well, and thinking about that, and the weather forecast can move these markets, depending on what we see on a morning run versus a midday run, for instance. So, as producers are getting busy in the field with planting and more, sometimes they kind of set aside their marketing. I mean, what would you tell folks just from a risk management standpoint here? I have to think that even if you're busy, you don't want to bury your head in the sand, so to speak, right,
Oh,
Brian?
well, right on. So let's just take a look at as an example for new crop corn prices. So December corn closed today 466, going to a 3-day weekend. That's not a stellar price, but it's a very good price compared to $4, right, or 375. You got this big acreage increase, and my bet is on every farmer listening or watching out there is on them. You're going to do everything in your power to produce a good corn crop. So at some point, the market starts to take some of this weather premium out. And the problem you have this year is 466 on December corn, 1020 or 1032 on November beans. Beans, it's still not a very good price compared to cost of production and revenue generated per acre, unless you just have these stellar yields. And then corn is acceptable, but nobody's looking at that. It's what I don't hear. I don't hear people calling me up and saying, "Hey, I need to get corn hedged. I need to buy puts. We've got too much at stake on the black side of the ink." Nobody's really telling me that. It's like, well, we're close to break even. Maybe we can make a few bucks here. So I think farmers are tepid in their selling, in certainly in soybeans, and probably making some sales in corn. But these price areas are what I call areas that are not no-brainers. And what that means is sometimes you get a price right. It's a no-brainer to sell. No matter where prices go, you can rationalize that was a good sale. You knew what you knew at the
How about
time you
over
made a
in
sale. It's not happening this year
yeah,
yet.
yeah. Yeah, no, and I think that's great sound advice. Is just I'd say I would like to use the term be nimble, but also have a plan, right, Brian? I mean, is that kind of how things need to go here, especially through a busy time period?
Yeah, pay attention. We're really, for lack of a better word, scratching and clawing for nickels and dimes. And I take a look at, we talked about December corn. Well, in February, got the high was 479 and three quarters. That's as good as it's been all year. And, um, and it's so something that really needs to be watched and to be monitored. And this week's high was 469 and a half. So it's like, well, okay, we're within a dime of the high, which still isn't a stellar price. But that's also representative of over 3 weeks ago, the mark was at 442.
Mhm.
So when I look at 466 versus for 442, or the week after we had a low of 436 and a half, it's a respectable rally that I don't want to forget. So the bottom line is, don't take your eye off the ball, right? Corn prices, bean prices have a tendency when they tip over to tip over kind of fast. And the calendar tells me, look, we're in mid-April. This isn't mid-February. It isn't mid-December. It's mid-April. If things go well, it's going to get tougher and tougher. When I say well, planting goes well, it's going to get tougher and tougher to kind of talk a bullish story when you're adding more acres in corn.
How about that wheat complex? I think weather a pretty big key there this week, whether we're talking winter wheat conditions or even looking overseas at conditions in the Black Sea, et cetera. What's your take on the wheat complex this week, Brian?
I'm going to summarize it in one word: disappointing. Disappointing export sales, disappointing market activity. We kind of, had a really solid week last week, and the dollar's continuing to soften up and look weak, right? And yet wheat cannot punch it, right? You cannot punch it higher. So maybe it's a reflection of favorable forecast. Again, you got that whole central Midwest, including the plains, above normal in precipitation in the forecast. So it's the forecast you need if you're on the drier side. But we're just, we seemingly find one more every other week. It seems one more disappointing factor, and this week was just another poor, just a really poor export sales, cumulatively in wheat. Just not anything that I would brag or write home about all wheat 2.8 million bushels on the old crop. 10.1 new crop, okay, but that's not lighting the fire. Buyers, I think, are buying as needed. In particular, I'm a little disappointed in the wheat market, Jesse, with the drop in the dollar. Gosh, the end user just isn't ringing that urgency bell.
Brian Doherty with Total Farm Marketing joining us here for our market analysis today. Again, no markets on Friday for Good Friday, enjoying a 3-day holiday weekend. Brian, I know earlier in the week you wrote your piece for our friends over at Successful Farming. You were looking at energy prices a bit, and I want to ask you about that. We've seen crude rally a fair amount here in the last several sessions. I mean, as you take a look at the energy complex as a whole right now, what are some key takeaways that folks need to be paying attention to right now?
Yeah, so I think one, just price. Look at price. Don't necessarily get caught up in this idea of, drill baby drill and this and that and the other thing, because the world is dynamic, and you've got a pretty volatile, and not that it wasn't with the Biden administration, but you got a pretty volatile, let's call it foreign affairs environment. And so for instance, today there's a oilprice.com, a lot of great information on their headline article here: new U.S. sanctions lift oil prices to a weekly gain. So oil prices, and this was regard to sanctions against Iran, and some discrepancies with China. So not being a what I call an expert in the energy complex, um, I think the thing to watch for is just price. Do we really think crude oil or the economy or the world's on the verge of really falling out like it did in COVID? No, tariffs aren't going to probably. I mean, it's disruptive and it's a positive for some, maybe not others. I don't think that changes the big picture much. Um, you're heading into the driving season. So what we saw was crude oil prices that were recently trading around $71 quickly retreat, and then you saw them move under $60, and that's a pretty high percentage change in a very short period of time. So that's what I mean by paying attention. We talked about even in corn. You're planting, you're in the busy, or you're getting fertilizer, you're trucking. Take a few minutes to look at these markets and I mean, you got a cell phones, you can do it on the go. I mean, it's 2025, not 2005. Make those calls to your vendors, see what they've got to offer, if anything, or talk to your advisor. Do you need a call option? Do you want to protect that? Um, there's been too many times in my career where Jesse, and not to belabor the point, but where it seems like everybody's kind of leaning one way and got it figured out, and the market does something very different. So if we get pullbacks in energy, I wouldn't be I wouldn't be too comfortable with the idea that it's just going to keep falling down, and maybe over time it will. But I still haven't quite figured out the conundrum. If we drill a lot of oil and lower the price of oil, you might not drill as much oil because you can't make money at drilling oil. So, so there's probably a leveling off somewhere in this 45 to $60 barrel range.
Yeah, good perspective. No, I like that. Just pay attention to price when it comes to these energy markets for sure. Brian, how about in the livestock sector? Let's look at cattle. Really good week in cattle. 4 days in a row, futures trading higher. Looked like cash trade ahead of the on-feed report was a little bit higher this week as well. Just overall, felt like a nice rebound in the cattle complex, Brian.
It was a really nice rebound in the cattle complex. And again, reflective of tight inventory, tight supply driven market. And the market's really trying to figure out and I say kind of, I don't know if I looked at those terms, but what's the new norm? Is it $200 a hundredweight? Is it 180? Will it be 220? And the market's trying to find that equilibrium point. And that's the market's job, to find out where the quantity of demand equals the quantity of supply. And if you basic economics, those are lines on a chart. When they cross over, that should be about your equilibrium price. And it seems to be searching for that. My concern has been that just economically, can the consumer continue to afford high price beef? More importantly, are we developing any new demand markets with high price beef? That's been my concern. So, yeah, quite a week. Cutout values rose again. Maybe packer buying for the driving season and whatnot. Very well likely could be. And then things soften up. But I really like the supply driven side of the market. I think you protect with puts, leave the top side open, unless you don't mind challenging the market, Jesse, by buying a put and then selling a call to collect premium, and you're willing to accept a hedge even much higher.
How about over in the hog market or in the dairy market as well? Any notes on that side of the ledger for us this week, Brian?
Yeah, we got some kind of a lot of activity actually. So milk market just zoomed higher today, 38 point higher on the last trade. The key there, back over 1827, wasn't too long ago, and I mean just days ago, weeks ago, we were under 17. We had a 16 in front of the market. So we're seeing the cheese market firm. We're looking at a really good opportunity for at these price levels to see market clearing forces come in. That is demand swoop up. Cheese, butter, whey, they're all a good price right now to the end user and consumer. I think what happens sometimes is you get a market that you just don't see much change, which we haven't seen World Global Dairy Trade or in the production reports. There's changes every month, but nothing significant. So the end user, I think, continues to kind of buy as needed. I'm not saying we're going to have a bull market here, but if one or two of them kind of get a little bit more aggressive, all of a sudden you could see some pop. Um, Unfortunately, I think the producers do what they do best, and so we're getting high quality milk in a lot of areas. They're getting paid a little more for the components, and so you've got quality, and that doesn't necessarily reflect. So the mailbox price may be better than what the class 3 price is reflecting.
Brian, great stuff as always. Any final thoughts you would share with folks here today?
I think we hit it before. Just stay very kind of in tune and alert. Recognize that none of the markets we talked about today, with the exception of maybe cattle, are really short of inventory. Corn snugger than it was a year ago. Beans, 380 million bushel carryout. That's not a lot if you don't measure up in the weather. But keep a really tight eye on this. Take a few minutes and look at it. We're getting to the time of the year where, if I could offer the suggestion, we talked about corn, either start making some small sales or at least get some target points above the market. We're not looking at mid-April with massive flooding. We're not looking at mid-April with a massive drought. It's kind of weather as usual here. A little bit of good, a little bit of challenge for others. So just stay tuned, get orders above the market to get those initial sales in place. New crop.
Yeah. Brian, if folks want to reach out to you at Total Farm Marketing for a conversation, how could they do that?
I would ask for a phone call at 1-800-334-9779 or shoot an email to me at brian@totalfarmmarketing.com.
Brian Doherty, Senior Market Advisor with Total Farm Marketing. Always a pleasure, sir. Thanks for joining us. And again, happy Easter to you and yours. We'll talk to you again next week.
Very much appreciate it. Thank you, and happy Easter as well.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.